Stop. Before you do anything else today, stop. Because what is happening right now in the silver market is something that most stackers, most investors, most people sitting on physical metal have completely missed. And I'm not talking about a small shift or a minor trend. I'm talking about a structural move that happens maybe once every decade, and the window to act is closing faster than anyone is telling you. Right now, as you watch this, there are quiet moves being made by institutional players, by sovereign wealth funds, by the kind of money that doesn't show up on retail investor radar. And they are accumulating silver at a pace that hasn't been seen since the early 2000s, right before silver went on one of the greatest runs in modern financial history. Most people don't realize this is happening. Most silver stackers are sitting there feeling good about their stack, feeling safe, while the real critical move, the move that separates those who protect their wealth from those who actually multiply it, is flying completely under their radar. If you're watching this on Money Insights, don't just watch, take action. Hit that like button and subscribe right now. We drop real-time market alerts that can give you an edge, and trust me, you don't want to be the one who hears about it too late. This channel exists for moments like this, so stay with me, because this video could genuinely change the way you think about your stack, your timing, and your next move. Now, let's talk about what is actually happening. And I want you to feel the weight of this because the numbers I'm about to walk you through are not something the mainstream financial media is covering. They're not on the front page of Bloomberg. They're not trending on financial Twitter. But the people who know, the people whose portfolios I follow, whose decisions I study, they are moving. Quietly, deliberately, and they are doing something that most silver stackers have been told not to do. Here's where the story starts. For the past several years, the narrative around silver has been simple. Buy physical, hold physical, stack physical, and wait. Stack your coins, stack your bars, lock them in a safe, and be patient. And look, that philosophy is not wrong. Physical silver is real money. It has been for thousands of years. There's power in holding something tangible that no government can print into oblivion. I believe in that. This channel believes in that. But here's what nobody is saying loudly enough right now. Holding is not the whole strategy. Holding alone in this specific market environment may actually be costing you something enormous. Let me explain what I mean. And this is where I need you to pay very close attention because this is the part most stackers completely miss. Silver right now is in an extremely unusual position. On one side, you have industrial demand that is absolutely surging. We are talking about solar panels, EV batteries, semiconductors, medical devices, advanced electronics. Every single one of these sectors is consuming silver at record rates. The Solar Energy Industries Association reported that solar installations alone are projected to consume over 200 million ounces of silver annually within the next few years. That is an almost incomprehensible number. We are talking about industrial demand that is structurally, permanently elevated, not cyclically, not temporarily, but permanently baked into the future of the global economy. And on the other side, supply is not keeping up. Global silver mine production has been essentially flat for years. New major silver deposits are extraordinarily difficult to find, expensive to develop, and slow to bring online. The lead time from discovery to production can be a decade or more. So you have surging structural demand on one side and constrained flat supply on the other. Most people who understand basic economics know what happens when those two forces collide over a long enough timeline. But here's the thing. Here's the part that creates the tension. Silver hasn't exploded yet. Not fully. Not the way the fundamentals suggest it should. And that gap, that space between where silver is trading and where the fundamentals say it should be, that gap is exactly what the smart money is looking at right now. That gap is the opportunity, and it is also the warning. Because here's what history tells us about gaps like this. They don't close slowly. They don't drift higher over years in a clean, predictable curve. They close fast, violently fast. Silver has a history, a documented, repeatable history, of sitting in a compressed range for extended periods, building pressure, and then making moves that look absolutely insane in hindsight. In 2010 and 2011, silver went from around $18 an ounce to nearly $50 an ounce in roughly 18 months. People who were watching it thought they were imagining things, and the people who missed the move, or who weren't positioned correctly, they watched it happen from the outside, wondering why they didn't act when the signals were right there. The signals are right there right now. And this brings me to the critical move that silver stackers are missing. The move that could make the difference between participating in what's coming and simply watching it from the sideline. And I want to be honest with you here. This isn't comfortable. This is the kind of thing that goes against the grain of the stacking community, and I know that. But I would rather tell you something real and useful than tell you what's easy to hear. The critical move is this: leverage. Not in a reckless way, not in the way that blows up inexperienced traders, but strategic, deliberate exposure to silver beyond just physical holding. I'm talking about silver miners. I'm talking about silver royalty companies. I'm talking about silver ETFs and silver futures for those with the risk tolerance and the knowledge to use them correctly. Because here's the brutal mathematical truth. When silver moves, physical silver moves 1 for 1 with the price. But silver mining stocks historically have moved 2, 3, sometimes 5 times what the underlying metal moves. That's called leverage to the metal. And in a market environment where silver looks coiled like a spring, that leverage is either your greatest opportunity or your greatest risk, depending entirely on whether you understand it. Most silver stackers I speak to have never owned a single share of a silver miner, and I understand why. The mining sector has its own risks. Companies can have operational problems, political risk in the countries where they mine, management issues, hedging programs that cap their upside. These are real risks, but here's what most people don't realize. There are ways to access silver mining leverage that significantly reduce those individual company risks. Diversified silver miner ETFs, for example, spread your exposure across dozens of companies. Silver royalty companies like those that sit at the top of the mining food chain collect revenue from multiple mines without taking on the direct operational risk themselves. These instruments exist. They are accessible. And right now they are sitting at valuations that, when you look at them against the forward price of silver, look almost irrationally cheap. The smart money knows this, and the smart money is moving. Now I want to slow down for just a moment, because I know what some of you are thinking. You're thinking, wait, is this actually safe? Is this really different from the speculative blow-ups we've seen before? Is this another person telling us to take on risk in a market that could just as easily go sideways? And those are the right questions to ask. You should be asking them. Anyone who tells you there's a guaranteed move coming in any market is either lying to you or delusional. The market can always surprise you. Always. But here's the thing about risk. The biggest financial mistake most people make is not the risk they take. It's the risk they fail to understand. Sitting entirely in physical silver with no additional exposure sounds safe. It feels safe. But if silver makes the kind of move that the fundamentals suggest it could, and you're only holding physical metal, you will make money. Yes, but you will have left an enormous amount of potential return on the table. And that's a risk too. That's the risk of underpositioning. That's the risk of being 80% right about a market call and still not capturing the full power of it. And right now, in this market environment, that risk feels bigger to me than the risk of strategic, measured exposure to silver leverage instruments, because the setup, the supply-demand imbalance, the industrial demand surge, the flat mine supply, the monetary environment, the geopolitical uncertainty driving safe haven demand, this setup is as compelling as anything I have seen in years of watching this market. Let me tell you about the monetary environment, because this is where the story gets even more intense. Central banks around the world, not just one, not just two, but multiple major central banks, have been buying gold at record levels for the past 2 years. The gold to silver ratio right now is still historically elevated. Historically, when gold leads a precious metals bull market, silver follows, and silver almost always outperforms gold on a percentage basis in the back half of the move. Always. This is one of the most consistent patterns in commodity market history. Gold tends to break out first, institutional money flows in, the narrative builds, and then silver catches fire. Gold has already made significant moves. Gold has already broken records. The institutional narrative around gold as a safe haven asset, as a reserve asset, as protection against currency debasement, that narrative is firmly established. The conversation is happening in boardrooms and central bank meetings and sovereign wealth fund strategy sessions. And silver? Silver is still waiting. Silver is still compressed. Silver is still in that gap between fundamentals and price. When that gap closes, it will not be gentle. It will not be polite. It will not give you time to slowly accumulate your position. It will move, and it will move hard. And if you are not positioned before it moves, you will be chasing it. You will be buying into panic and euphoria instead of into value and patience. You will be on the wrong side of the trade. And most silver stackers, most people watching this right now, they are set up perfectly to be on the wrong side of that trade. Not because they're not smart, not because they don't understand silver, but because they're following a strategy, stack physical and weight, that was designed for a different phase of the market cycle. We may be entering a new phase, and the strategy needs to evolve. Here's something else that's happening quietly that almost nobody is talking about. There is a serious, growing conversation at the institutional level about silver's role in the energy transition. Governments around the world have made commitments, legal, binding commitments in many cases, to dramatically expand renewable energy infrastructure over the next decade. Solar panels require silver, not a little silver, a significant, irreplaceable amount of silver per panel. There is no adequate substitute. Researchers have tried to reduce the silver content in solar cells for years, and while they've made some progress, they've hit physical limits. The photovoltaic effect, the mechanism that converts sunlight to electricity, is most efficient with silver. The laws of physics are not negotiable. Now here's where this gets alarming. If you model out the silver demand from solar expansion alone, just solar, not EV batteries, not semiconductors, not anything else, and you stack that against known silver mine production and current silver inventories, the numbers start to look very uncomfortable. Some analysts, doing serious, data-driven work, are projecting a structural silver deficit that could persist for years, not a temporary supply crunch. A structural multi-year deficit where demand genuinely exceeds supply on an ongoing basis. And when that happens in a commodity, when the market truly internalizes a structural deficit, prices do not move up gradually. The market reprices sharply. Now, I want to be very clear. I am not telling you this is guaranteed to happen tomorrow. I am not telling you silver is going to $500 an ounce next year. Nobody knows exactly when the market makes its move or exactly how large the move will be. Anyone who gives you a specific number and a specific date is selling you something. What I am telling you is that the setup exists. The structural case for silver is arguably stronger today than it has been at any point in the past decade. And the gap between that fundamental case and current silver prices is a gap that has historically closed. Not gradually, but explosively. The question is not whether silver stackers should be paying attention. Of course they should. The question is, are you positioned to actually capture the move when it comes? Or are you set up to watch it happen and wish you'd done something differently when you had the time? Because here is the hardest truth I can tell you. The time you have right now, this window, this moment of relative calm before the market potentially reprices, this is exactly the kind of window that people look back on later and say, I should have moved. I knew the signals were there. I understood the setup. But I didn't move, and now it's too late to get positioned at these levels. I've spoken to people who watched the 2010-2011 silver run from the outside, people who had been stacking for years, who understood silver better than most, who believed in the fundamental case, and who somehow still didn't act when the setup was clear. They knew, they just didn't move. And when silver went from $18 to $50, they watched every single dollar of that move from the sideline, holding their physical stack, technically up, but not capturing the full power of the move. Do not be that person. This is not about abandoning your physical stack. Your physical silver is your foundation. It is your insurance policy. It is real money that cannot be hacked, cannot be seized remotely, cannot be inflated away. Keep stacking, keep holding. But do not let the comfort of your physical position make you blind to the other dimension of this opportunity, the dimension that could turn a good outcome into an extraordinary one. And here's one more layer to this that I haven't even touched on yet, the geopolitical dimension. Because this is the part that could accelerate everything unexpectedly on a timeline that nobody is predicting. We are living in a world of increasing geopolitical fracture. Supply chains that the world assumed were stable and permanent are being reconsidered. Countries are looking at their dependencies on foreign supply, for critical minerals, for energy, for technology, and they are getting nervous. Silver is not just an investment metal or a safe haven. Silver is a critical industrial material. And in a world where nations are increasingly competing for access to critical resources, the geopolitical demand for silver could add a dimension to this market that most retail investors are completely unprepared for. Imagine a scenario, and this is not fantasy. This is a scenario that serious geopolitical analysts are modeling, where a major industrial nation accelerates its solar and clean energy build-out as a strategic national security priority, not just for climate reasons, for energy independence, for economic leverage, for geopolitical power. That kind of state-level demand, sovereign demand, backed by government resources and political will, is a different category of buyer than the retail investor or even the institutional fund. That kind of demand reshapes markets. That kind of demand makes the supply-demand equation look completely different. We are already seeing early signs of this. We are already seeing government procurement programs, strategic stockpiling conversations, policy frameworks that directly or indirectly drive silver demand. These things move slowly at first, and then they don't. So where does this leave you? What is the actual practical, actionable thing that you should do right now? Because I know that's what you're sitting there wondering. And I respect that. I'm not here to scare you and leave you without direction. I'm here to give you the most honest, most direct assessment I can. First, audit your current exposure. Look at your stack and ask yourself honestly, if silver moves 50%, 80%, 100% from here, what does my portfolio actually look like? Is the move meaningful to my financial position? Or does it barely register because my exposure is too small? If the answer makes you uncomfortable, that's important information. Second, research the leverage instruments available to you. Silver miners, silver royalty companies, silver ETFs. Understand what they are, how they behave, what their risks are. You do not need to dive in blindly, but you need to understand what is available so that if you decide to expand your position, you're doing it from knowledge, not from panic or hype. Third, understand the gold to silver ratio and watch it closely. When the ratio begins compressing, when silver starts outperforming gold, that is often one of the clearest signals that the silver move is accelerating. Right now, that ratio still has significant compression room based on historical averages. When it starts moving, things can happen fast. And fourth, and this is the one that matters most, do not wait until the move is obvious, because by the time it's obvious, by the time it's on the front page of every financial news site, by the time your neighbor is asking you about silver at a dinner party, by that point, the easy money has already been made. The people who move early, before the narrative is fully formed, before the mainstream is caught on, those are the people who capture the full power of the move. You are watching this video right now, which means you are already ahead of most people. You are already paying attention. You are already asking the right questions. The question now is whether you act on what you know. Silver's story is not over. In many ways, it feels like it is just beginning. The industrial demand, the monetary case, the supply constraints, the geopolitical pressure, all of these forces are converging at the same time, in the same direction, and the market has not fully priced it in yet. The critical move that silver stackers are missing is simple. It is the recognition that we may be at an inflection point, that the strategy that served you in the accumulation phase may need to evolve as we potentially enter the appreciation phase, that holding physical silver is a foundation, not a complete strategy, and that the window to position more aggressively before the move, before the crowd, before the narrative is mainstream, that window exists right now, but windows close. And here's what I'll leave you with. There is something else coming. Something connected to this silver story, connected to the monetary environment, connected to the geopolitical pressures I've described, that I haven't told you yet. Something that, when I show you the data in our next video, is going to fundamentally change the way you think about your entire precious metal strategy. Not just silver, not just gold, your entire approach. The pattern that has preceded every major precious metals bull market in modern history is forming again right now, and most people are going to miss it completely. Make sure you are subscribed. Make sure you have notifications on, because when we release that video, you will want to be watching. The question is whether you'll be ready.